This is Charting Cryptos and Commodities. We'll start with Bitcoin. What I like to see now, this is our 3 time frame chart. Those of you not familiar with it, we do have a great teaching I'll put at the end of today's video on how to set this simple chart up. It's nothing but Heikin Ashi candlesticks, a 30 period moving average line, exponential moving average line, and volume. That's all it is. But it's on 3 time frames. It's on the weekly, it's on the 2-day, and it's on the half day. And what's so beautiful is you can see as trends develop on these charts. This vertical dotted line you see here, it tracks on the charts all at the same time. Now, they're different places because it's the weekly and it's the 2-day, and then of course it is the half day. And remember, for every weekly chart, there are 10 half days and there are 2.5 2-days. So that's the reason you have it spread out like that. But what's so beautiful about it, what I'm starting to see with Bitcoin is we're starting to get, the movements weren't very light and hard to track in the past. When you start seeing, a green within a bunch of reds and maybe a couple of greens and a couple more, what you want to see is you want to see good solid red and good solid green volume lines. The same you want to see with the candles. And of course, we started to see that earlier on this 2-day when we had this last run up that started. And of course, we want to be able to draw trend lines and have those followed. So we just managed to be pushing through this 30 period. So that's the 30-week EMA, because this is a weekly chart. We just pushed through that. That's a decent sign that it did clear it. Now we see some slowing down for the day. At the time I'm recording this, 2.64%. This is on a 24-hour-a-day Bitcoin chart. You can see where it blew off some of that steam. And again, we're just waiting for Bitcoin to get back into a pattern where we can track it like we had before. But with the crash and all the crazy stuff that went on with Bitcoin, it takes it a while to start producing discernible patterns again. This latest one, not so bad. But again, you can see as it sets itself up, if you track it on the 2-day chart in the middle, you can't see it on the half-day chart because it's way too far to the left. But if you look up here, you can see on the weekly chart, as things bottomed and as they started to move up, you can see it just sort of slid all around the bottom here with lots and lots of indecision, trying to figure out what to do. And then we got a green volume, not a lot of volume, and sort of a doji in there, a lot of weak movement. And then all of a sudden the volume ramped up. We got a green candle, stayed ramped up that next week. Volume started backing off some. We got, again, not so much volume with that doji there, sort of a warning sign. And then what did it do? Stayed true, moved up, got a lot of volume there, made this one iffy because, again, let's focus in on that. The way you can do it, you want to highlight this area, okay? And then if you go down to the bottom on the right, you can toggle to maximize the chart. But again, you can see where we had a doji here. And again, didn't have super high volume. That would have told us the insiders were selling out there, getting ready to go down. And then, of course, the next week, again, we got a spinning top, but it was green, not red. Again, could have been a move to sell out, but the following week, this week, volume has dropped off, but it is trying to move up, but look, it's not getting higher. So some warning signs potentially there. We'll see what the volume does here. If that volume really jacks up as the week goes along, that would make us quite worried. But that is where we are on Bitcoin. Now, let's take a look at Ethereum. This is again on the weekly chart, sort of similar. You can see where volume's really backing off, but at the same time, the candles are backing off. You do have a green up candle here again, maybe trying to test this high. So we'll keep an eye Again, we want to see, and I'll go back to just we want to see discernible clean patterns where you have up moves that go up. They go up long enough for you to be able to see a time to get in, ride it. And then when they end, we don't want them to end so abruptly that they just roll over and hammer down. So again, you want it to be reasonable so that you can track it and you can make money in your practice trades off of it. Where are we when we look at, excuse me, and this is the Bitcoin 10 Crypto Index Fund. We like to look at this once a week. What is it? It tracks all of the cryptocurrencies, and it's weighted top 10, well, I say all, I'm sorry, the top 10 cryptocurrencies weighted based upon market share. So Bitcoin's the big boy there. And again, we can see where it went up nicely, and then it sort of got sloppy right in here as the market sort of got sloppier. So don't like seeing that. I want good, solid trends with lots of up and down movement where it's easy to track. And it was getting better. And again, we'll just wait, watch and see. Give it a little more time. Again, if you don't have something that's ripe to trade, guess what? You don't trade it. You don't have to rush into anything. There are thousands of things. Stocks, ETFs, commodities, Bitcoin, cryptocurrencies. I can go through the list. Foreign indexes, optionable stock sectors. Heavy metals, you name it. There are agricultural funds. There's a million things to trade. Only trade what's moving and what's working and what you can discern patterns on. That's just simple. Now, let's look at where we are when we go to commodities. We'll start with the gainer for the day, and that is natural gas. Up 5.13%. But when you look overall, and let's go back to this weekly chart. Let me go to the weekly, pop that up for you. When we look at what natural gas has done, you can see where it peaked back in August of last year. But for a little sideways slide, a little pop up there in late November, it has just been a hammering down. Even though it was up some for the day, still just hammering down. I don't mess around that much with commodities. I like to know what's going on in the world, watching them. When I do find patterns that are discernible, of course, with anything, I don't hesitate to consider, I'll practice trade anything. Real money trade things, again, I want to make sure that I'm making intelligent decisions and not simply gambling. We look at what's up with coffee. I was so excited as coffee just continued to bottom. It hit its bottom back in January, and since then it is stroking up. Again, touched the 30-day or the 30-period EMA on this chart back in late January, and then pushed through it last week and really hammering through it this week, just moving up. Sugarcane, again, continuing to move up to, is this the highest it's ever been? Whew, that's sort of scary, isn't it? Look at those sugar prices, just a booming up. And again, as you watch these, trying to find discernible patterns. Of course, this last one was great, but if you tried to go in the past jumping into this, it goes up and then it can hammer down on you. And again, when we look at price movement, it's not that great. We're talking, a high of $9.46, then popping up the next week to a high of $9.68, then popping back down, again, not anything I would be super excited about. We go look at soybeans, and again, trying to find a good discernible pattern to track on this. There are some, if you go back, you can always find a bull market somewhere or a potentially tradable bear market, but when you start seeing all these volume colors spread out, what you want to see on a good trackable chart is, of course, you want to see green to red to green to red. You want to see the same thing down in your volume. You want to see discernible volume patterns, discernible colors, and you want to be able to figure out what the volume is telling you. Otherwise, you're just asking for confusion. Look at gold. Gold's a little bit better. I mean, we can see when gold rolls over, when it slides sideways, when it turns around and tracks up quite nicely. And again, as you track both the volume and the pattern, this is just the weekly chart. So, of course, you also have the 2-day and the half-day to rely on in these potential trades. Copper, copper down for the day, 0.90%. Copper most recently peaked back in mid-January, then down, now trying to pop back up again on, the volume. Again, this is the weekly. If we go take a look at where we are, we can again see, volume solid on the day heading down, but again, nothing that's getting me super excited about that chart. And then we look at corn, big feed stock. Humans eat corn, animals eat corn. Where is corn? Well, it peaked all the way back in April of last year, then headed down strongly, up, down, and now just sort of tracking sideways. Actually hit its most recent high back in December and early January. So not a whole lot happening with corn. Wheat, just way down there. That's good to see. A lot of the world, relies on bread and wheat for sustenance. To see those prices low, much lower than they were when they were not quite double what they are now. That's good to see. Silver. We saw silver hit its peak, right as it started really hammering down. You had some crazy volatility that week starting January the 30th. And then, of course, it has moved down and trying to move through that 30 EMA as we look at things. And we'll keep an eye on silver, see where it bottoms out when it starts to move up again. Oil, oil staying below that 30-day EM, or 30-week EMA. And we look at where we are on gasoline. It spiked up a few weeks ago and now has moved back down. Isn't it fascinating as we look at these different commodities to understand and see what's actually going on in the world? Is that not interesting? And again, gasoline, one of these where you see some clearer patterns, don't you? Going from red to green to red to green to red. Much better than some of these other commodities. So again, you're interested in tracking commodities and following what's going on in those markets. All you have to do is watch your favorite 101s on a daily basis. Do some practice trades, see how they work for you. If you can discern patterns, if you can read the volume, and if you can make acceptably safe and practical trades when the charts tell you to do so. And I will tell you, the magic in all of it is doing what? Cutting your losses. That is using this little friendly helper right here in prediction and measurement tools, your long position and your short position. Now, I'll tell you a little secret as to how I use this 3 time frame chart. I trade off of the weekly chart. When I start seeing, red as far as volume goes and the candle goes, and you see that setting itself up for you on the 2-day chart and on the half-day chart as you're starting to consider to jump into that trade as you see a change working, then, of course, I use the measurement tool to set my my movement, that is my profit and my loss bands. I like using, and the reason I have ATR set up on this middle chart here, I use the ATR to set my profit and loss band on the weekly chart. I just find that, again, I tend to win more. I set one ATR as far as my loss band goes, and I set another ATR for my profit band. When I hit my loss band, of course, I am out hopefully way before then, but if I do hit it, I get out. And of course, if I hit my profit band, I sell half my position and let the rest of it ride until I get a discernible change in trend, and then I sell that off. That way, I'm guaranteed that first ATR of profit, and hopefully I can let the really good ones ride and really capture lots of extra profit as things move forward in time in the direction of my trade. That's it, folks. Appreciate you being with us. I love to hear from you. CW@chartingwealth.com. God bless my friends. All the best from the whole team at Charting Wealth World Headquarters.